Welcome to another Founder Wisdom Pod. We have Roel Wolfert with us today. He is in the Netherlands, a technology leader. It's all about transformation, fintech, tokenization. He's also an author. So we're going to talk about what he's up to nowadays. Him and I were talking about sports, boxing, running right before that. So Roel, welcome to the pod. Tell us a bit more about yourself and what you're up to.
Well, thank you, Charles, for having me on the podcast. Well, I'm 53 years old. I've had pretty much a executive lifestyle till 2014 when I was an executive at Visa Europe, and I decided to become an entrepreneur. And since then, I had a whole journey from building consultancy companies to what I do nowadays, which is basically what we call redevelopment. So we acquire software companies or software business units or software products from other organizations that actually struggle to make it profitable or run into some strategic issues. We take it over and then we recycle what's there into something new. So it's a, I would say, niche market, because most of what we see is the traditional run from startup to scale up. And actually, we work a lot with SMEs or larger organizations where innovation has failed, or old products that they cannot revitalize. And yeah, it's a whole mix of exciting things, working, integrating people, teams, technologies, shifting IP from one entity to another to create value, client mapping, and of course, most of the units that we take over are financially negative, or at least not very positive. So that always brings an interesting dimension to what we do.
Seems you started your career in the common classing Netherlands/European way, like working at companies at corporation Cap Gemini. I see
Yeah.
here
Yep.
Logica, Visa. What have you seen these big companies fail at? Is the first question. And also, where do you see like finance and financial tools like credit cards failing us, where blockchain and Bitcoin can possibly have us win?
Well, firstly, I think where the larger corporations are not so good is in the M&A game. So quite often they are very excited to buy a company or integrate a company, but quite often you see that uh, they lose the baby with the bathwater, as we say. So the intentions are great, and I was in Logica when I think it was in my 20s still, and there was a Logica took over another company called CMG, and this whole merger, all communication was we're a great fit, we're brilliant, lots of synergies, and the reality was that the cultures were 180 degrees apart from each other. It was difficult to integrate. The business models didn't work. There was no real commitment from the management, and not enough funding to make it all successful. So I would say, your question, Charles, where they do they go wrong? Either they don't understand M&A and what it really means, and they underestimate the cultural aspect of bringing teams of people together. And that's, I think, one of the key things that we are really keen on. There's too much emphasis on the Excel spreadsheets, the numbers, the margin, and then they think it will automatically add up. One and one is two. Yeah, but that's quite often not the case, I've noticed. So in that respect, I've seen many of these situations. Capgemini, I was very young then, but they took over EY or Ernst& Young when they were called like that, consulting. That became, I would say, that's also a failure. Yeah, because most of the people from EY left pretty fast after that, and there were problems with the salaries and politics, and it didn't work out as great. But I haven't been very intensely involved in that journey because I was still just a consultant, on the work floor, just making my hours and making my clients happy. Yeah, and that I think is the biggest thing that I saw, that you know these organizations that are doing buying and selling, the seller is overselling and the buyer is underestimating or overconfident in what they can and cannot do, and they also are not very creative. Yeah, so we just take IP from one company, put it in another company. We have models for this. And what we also do differently, we start working on the work floor ourselves on a day-to-day basis. So we don't, sit in an ivory tower waiting for the Excel spreadsheet to arrive on Friday afternoon and have a 2-hour conversation with the CEO or the managers or whatever, and talk them through and have some smart questions. No, we sit on the work floor. We don't believe in management layers, so we cut out all the crap. Everything that is uh, administrative or supportive, we basically, yeah, we either. So, for example, HR. I think HR is responsibility of the manager. You don't need an HR department to, actually be part of your organization. Yeah, and simply put, I think in most companies where I worked with HR is just a legal department to protect the company from liabilities from employees. That's how it feels. Yeah, and I think, or we believe, that the people are true assets in the company. So you need to create an environment where people can be themselves and really, grow, develop, meet the objectives that they set for themselves. And of course, you need to align that properly with the company's objectives, and then you see beautiful things happening. So, that's where I've seen every time the cultural aspect in each M&A that I did with large companies was always underestimated. It was always done wrong, and there was put too little time, resources, and attention to make that work. And that's what we try to do differently.
You've been through various winters, I guess, of BTC and crypto. Are
Yeah.
you still bullish? You've also seen a bunch of scams, right? And like the reputation of crypto generally being tarnished. Are you still bullish on the topic, the technology itself? Also, I would add in the age of AI, in that caveat, right? Because I've seen a bunch of my crypto clients now being like, BTC not so much anymore. Let's just focus on this agentic stuff, which seems to be 10,
Yeah.
100xing on a daily basis. What are your thoughts on this?
Yeah, well, first of all, there's always a new gold mine and there's always new shovel sellers, right? So, and the shovel sellers, they always make money. So they point out a new opportunity and say, I have an AI shovel for you. You want to buy it, right? So, um, first of all, so I'm blockchain technologies in itself, you cannot see independent from other technologies like AI. So I fully believe that like smart contracts, where intelligence is required, AI can actually play a very important role. It can also help you to get, because this whole blockchain world is pretty global, to get good insights, good marketing, good automation in place with AI. So it's actually quite there's good synergies from my perspective. If you look at it from an investor's perspective, yeah, I can assume that you want to jump on the hype of 100x in AI companies. But if you're an entrepreneur, you just want to be working on your purpose and what you want to achieve in your working life, right? And combined with your private life. So, am I bullish on Bitcoin? I think Bitcoin for the next decade, at least maybe 20 years, it will be the digital gold. Yeah. So basically, gold is the collateral to do business in the industrial age. We're now in the digital age, so we need a little bit different collateral. And I think Bitcoin is a key candidate to play an important part there. Yeah. So I wouldn't be surprised if your company or you don't have some Bitcoin or Bitcoin access, that at some point in time it becomes difficult, to be part of certain parts of the economy. Yeah. So that's one thing. But blockchain is way broader. Yeah, we're working in the tokenization space, so we fractionalize all sorts of real world assets, yeah, shares, gold, art, these sort of things, and make them as an investment vehicle available to a larger crowd. Yeah, and you take out the middleman, the banks, so all the 2%, 1%, 5%, and guess what? The investor earns more money. Yeah, and they actually own the product rather than some sort of right, or maybe the economic upside, but not the real product. Yeah, so there's a lot of very possibilities in that market. And I was in London earlier this week on the Real World Digital Assets Conference. You see top players there from financial industry and markets, including BlackRock, State Street, big tech companies. That market is really going into the 600 trillion that was estimated, because ultimately we all see that with the unbalance in the market from a political economical perspective, it's very important to start spreading risk. And in order to do that, you have to make things smaller and accessible to a larger crowd than, let's say, a few 500 investors. You want to have a potential of maybe 500,000 investors, or 5 million investors, or 500 million investors, depending on what type of asset it is. So, in that respect, I think, I'm very bullish on the technology, and I see the combination. Bitcoin is, you can argue about that, but if people are going to buy some sort of cryptos, yeah, know what you buy. And if you want to invest relatively safely in this cryptocurrency space, Ether, Bitcoin, that sort of, don't go much lower, I would say, on the top 10 list, unless you're a real specialist in the field. Yeah, and you understand what a coin is doing, what the project and the business behind it, how their ecosystem works, what the upside is, what the downside is, any hurdles, any freezes, any whatever. You know all the tricks, Charles. So otherwise, it becomes hugely high risk. And having been in this market since sort of 2015, 2016, I've done and seen quite some ICOs. Yeah, and there's always this typical play of, let's say, large players, let's call them whales. Yeah, and then the coin goes out, they cash in, the price goes down. Yeah, this whole pump and dump thing. It's yeah. Look, if you see that, then generally you either start playing in that, which is not me, because I think that's, you know, I find it unethical, but it's an unregulated market, so people can do that apparently. And I wouldn't do that. So I would say stick to the top two, top five sort of currencies, and have it as part of your investment portfolio. And if you look at your business, you must have blockchain bank accounts for stablecoins or Bitcoin, especially when you operate in the digital space. So if you're a software provider, or you're in the services business, or things like that, that is, it should just be in your bookkeeping system, and in your banking administration. You can't do without anymore.
But shouldn't founders think of building like fintechs before they think of building crypto businesses or B2C businesses? Because fintech still seems like it's the real bridge between consumers and reality. BTC, I mean, yeah, BTC is real, but seems like it's a bit more extremist as a vision, and it's more on the freedom side, right? And consumers aren't
Yeah.
necessarily ready to go there. What do you think about that?
Well, if you're just a consumer, look, right, and you want to invest in crypto, go there. But I think what you see now in the market with tokenization is happening. So in the early 90s, late 80s, you had the stock market, we had black, whatever it was, yeah, and it crashed. But in those days, it were only the large intermediaries and the large players on the stock market, right? Then we got the long tail of the stock market, where people had internet banking and all sorts of tooling using the internet, where consumers could buy straight into portfolios of shares. Yeah, they could buy stock on the stock exchange directly, etc. Sometimes with middlemen, but it became active, and there's a market for that. The same with crypto. Yeah, so there will be people who say, I want this to be part of my investment portfolio because I want some gold, commodities, I want some crypto, I want some real estate, and I want some shareholdings. Yeah, if you look at a guy, Dutch guy Willem Middelkoop, he's very famous for his gold funds. He always talks about this 25%, 25% basket of four. Um, so that's investment advice. If you're an entrepreneur and you want to start a business, it's a great idea. Understand your market, and you have to make decisions. Yeah, the first decision is, who do you want your product to be relevant for? Is that a financial institution? Yeah, because they can, if you win one, you get a whole lot of money for one project, yeah, or do you go for consumers? Then you will have very little money. You need very many clients, but you don't have lengthy sales processes. You can just use the internet, alpha beta testing, and in your technologies and get running. Yeah, or you want to go in sort of a middle ground. You want to play in the B2B space, so to say, more with corporates and others. Now, there you have a mix. So what I find most important when I do business is do I understand and I the right person? Do I have the characteristics to network with these people, for example? Yeah, if you want to sell, are they in your network? Do you have cultural affinity with that market? Do you understand what's going on? Do you know how to make the connections, especially in the B2B space? Yeah. And also, if, for example, your type of personality that you want to hang out with people and meet your customers, then doing an online web store is not a great thing to meet your customers. Then, build a brick and mortar store and put your products in there and you can meet your customers every day. Yeah. Now, that's a completely different profit model, of course. And but follow the purpose, that's more important, and make sure that you as a in one of your podcasts you talked about Tony Robbins, right? So I've been to Tony Robbins. You do the exercises, you get to develop yourself, you understand who you are, what your purpose is. That is real. And especially when, for example, you do his business masterclass or the masters business, yeah, he will combine that with you being as an entrepreneur, as a manager in a company, and I think that's excellent. Anyway, I'm diverting a little bit from your question, Charles, but yeah, my advice would be, look who you are and build a business based on who you are. Yeah, don't try to go for fast money because you think you can earn a lot of money and get in there, because then doing business will be very frustrating. Follow the most exciting thing you can come up with today and follow that excitement.
There you go. What do you do nowadays with you have a couple of companies. Do you still run Bitcoins, Bilex? You
Yep.
also have two tokens. Tell me about your day to day.
Yeah. So, well, in Reimaginate, we have several people and we all are focused on a number of the ventures. So I'm actually focused on Bilex a lot. That's a custom software development company specialized in AI blockchain applications. Yeah, so we have some huge talent there, with mathematicians and nuclear scientists and all these statisticians. Yeah, and I think the company had a great track record, for example, and we're revitalizing that brand, and bringing new customers, longer term vision on board, where we go more focus. Then 2 days a week, I'm involved in Liquid, which is the financial tokenization platform. So for shares and bonds, where an SME can buy the platform and raise capital by selling its own shares or raising a bond. Yeah, and basically you set up your own credit lines with your investors, your own financial ecosystem for the long term, which is, I think, very interesting given what banks are doing and crowdfunders. They get very complicated in what they're doing, and they become hugely expensive, and or they ignore you. You're too risky. That's quite often what you hear. Um, and then last but not least, so I'm involved in Bitcoin, so crypto ATMs, cash into ATMs into Ether and blockchain, of blockchain Bitcoin. Yeah, that's a completely different game. We have to deal with the authority, financial markets, compliance, micro license. Um yeah, where, let's say, the real software development is sort of creative, innovative, problem solving. Yeah, in the whole Bitcoin operation, we see this more as it's compliance. You have to think, can we really onboard this customer? He looks very wealthy, but maybe he's a crook, or whatever. And there's completely different ecosystem of how you operate and what you do. But yeah, so that's how I split my time. And then on Friday, we spent 2 hours at Reimaginate. Yeah, or a couple of more hours, depending on what the agenda is, looking at new ventures or reporting back to each other how things are going, and discuss common issues with the partnership.
And what kind of companies do you work with? And also, I've heard you invested in some as well? What are your criterias?
Well, so first of all, the most important criteria is when so mostly when we don't invest like 5% or 10%, we buy the company or we don't. Yeah, so we have a controlling stake when we take over a business unit or a company. And I think the first thing is we ignore everything. We go to the office, we meet the people, and we have an open, frank conversation. Because people matter. And if I have the feeling or one of my colleagues that the management is not up for it or not suitable or there's no click or it's just complicated to talk with them or you just feel in your gut like is this working, yes or no. If the gut says no, we say no, and otherwise we move forward. And in our situation, quite often these processes are relatively shorter. So because these companies are under pressure, so you don't have 12 months of due diligence and conversations going. So it's generally a 3 to 6 months process. You squeeze it through. We make a contract and we take on the whole deal for basically quite often €1. Yeah, so we buy everything for €1. But then we, of course, have to carry the cost of redevelopment, reinvesting in staff, or paying off debtors or reorganizing an organization and carry the cost of that. So yeah, that's how we work. So it's a bit different than the traditional stuff.
There you go. What are your top goals for this year? Your top priorities?
Well, I think it's always difficult, but on a high level. So we look like by 2030, yeah. So by 2030, 20 maybe even into 35. So we set goals for that far out, not just for this year, but where we want to be. So ultimately, we seek to be, around 25 software companies in portfolio. Yeah, and of course, we're not the type of company that does exits. So I call myself also a little bit of what we call dividend entrepreneur. So once a company has been transformed, what we do is we talk with key suppliers, key clients, and staff, and we make sure that they all get a significant shareholding. And we step out from the daily management. We hold, let's say, it depends a bit on the situation, but 25 to 60% of the shares within our company, and we only step in when there's a strategic change needed. Yeah, and we step into the back burner and become dividend partner. Yeah, that's it. So for this year, because we acquired 7 companies in 2024, yeah, and into early 2025. So we have a lot of restructuring to do. And yeah, basically this year is the year of growth and expansion. So we used last year to structure all legal aspects, compliance aspects, reorganize, close down, hire, yeah, just get the basic hygiene in place. Yeah, strategic focus within each company. And this year is the year of growth. And then in sort of after the summer, I would say we're ready to look at new ventures again. To onboard them before the end of the year.
Nice. Where can people find out more about you, Roel?
Well, so first of all, we have, of course, my LinkedIn profile if people are watching there. So that's always good. They can, I generally tend to actually respond to messages on LinkedIn. Unless you're an AI, of course, because we sort those out easily. On the Reimaginate website, reimaginate.eu, or any of the other websites, we have a general phone number as well. You can just call us, and I'm very approachable, so people can just say, "Can I talk to Roel?" And if I have a time slot, just I'm there.
There you go.
Yeah.
So I was Roel and Charles for another Founder Wisdom